Good evening. This side Rahul Magan here is a Group Chief Executive Officer, Treasury Consulting. As we speak, Treasury Consulting is a multi-asset and multinational hedge fund. By multi-asset, I mean we actively covering our positions in multiple asset classes of the globe. And by multinational, I mean we actively covering in multinations. But like I repeated many a times, and I would continue to repeat all the times that we are a proprietary hedge fund. By proprietary, I mean to say no third party. Let me repeat, no third party can invest capital in our funds. Equity dilution is not bad. The technical meaning of equity dilution is when one company, either listed or unlisted, sells the stake. If it is listed, then one existing stakeholders, he may or might not be a promoter, sells his or her stake and makes somebody else as a beneficial owner. On the contrary, if it is an unlisted company, then technically it is always a promoter who is diluting his stake for the sake of funds. So, the tactful meaning is that equity dilution is not incorrect. Equity dilution is perfectly fine. Common sense prevails the timing of the equity dilution. In this week, which has just ended, two equity dilutions came into the picture. And I can't say unfortunately, but technically speaking, I failed to understand one of them. While for second, I was sure it was bound to happen, and that did happen. Number one is the SoftBank, who sold approximately 3.8% stake. Approximately 3.8% stake in Delivery. We all understand that Delivery is a loss-making company. But India is a great country because in India, even loss-making companies will get the approval to raise initial public offer. Now, whether it is a Zomato, whether it is Paytm, Policy Bazaar, Nika, Delivery, and now probably Oyo would also be joining this race very soon. We all understand that the investors suffered significantly. But the beauty is not a single media channel, business magazine raised the issue. Everyone talks about Adani. Everyone is talking about Adani, that Adani enterprise, which was around 4,200, now it is, I think, around 1,500 rupees. And many people asked me, what is your opinion about the Adani? Well, I would be sharing my opinion at an appropriate point of time. But before sharing my opinion, I would like to ask one question from the concerned people. And that question is, what is your opinion about three companies? Number one, the Tata Group. Number two, the Airtel. And number three, the Vodafone. Why did I say Tata Group, Airtel, and Vodafone? Because in all three companies, one thing is similar, which is a huge debt in the books. Huge debt in the books. Like if I speak about Airtel, then it is approximately 2,18,000 crores. If I speak about Tata Group, then you please see the annual financial statement of Tata Sons and you would get to know a figure you can't trust yourself. On the contrary, if we speak about Vodafone India, then it is 2.5 trillion, which is 2,50,000 crores. The debt level in these three companies are so high. To me, it is a huge figure. But the beauty of life is no one bothers, but I do bothers. Henceforth, when people come to me and they ask about equity dilution, the very first thing I always speak is the timing of the equity dilution. I completely agree that no one can time the market, but many a times, if you have a knowledge, then you can decide your dilution towards a point when you get the maximum. Example, in the second scenario, State Bank of India may looking to cut a stake in a Yes Bank once the lock-in expires. I hope you all remember 2020. In 2020, Yes Bank scandal has had happened. Thousands of investors in India lost a huge amount of money when the share price, which used to be in several hundreds, reached 12 rupees, 13 rupees, and they lost a tremendous amount of money. But we should be thankful. We should be express our gratitude to Honorable Mumbai High Court. Because thanks to the Honorable Mumbai High Court, they reversed, rather quashed the order of Reserve Bank of India as far as the phase out of 81 additional tier bond 1 is concerned. But unfortunately, I was expecting a very serious discussion on this issue. I was expecting a heads up to Honorable Mumbai High Court, a very great appreciation to the Indian judiciary for such a formidable and a landmark judgment in the financial sector. But unfortunately, that not happened. But I am thankful. According to the public information, Yes Bank is moving to Supreme Court to challenge this judgment. Let's see how Supreme Court would be taking this point. But having said that, it would be a landmark judgment for Supreme Court also. The reason being the precedent Supreme Court would be setting for Yes Bank, this precedent to be followed for a very long period of time until otherwise a similar event to a Yes Bank would have happened in India. Now, if today's State Bank of India, because according to this report, which I got it from, the Money Control, according to this report, as of December 31st, which means around 2 months ago, Yes Bank SBI hold 26.14%. 26.14% stake in the Yes Bank. And according to the public information, SBI is the largest shareholder in the Yes Bank. And as we speak, SBI do not want to permanently retain a stake in a Yes Bank and would want to trim its holding. Although in phases, one of the sources told Reuters on the condition of anonymity. I don't know who is that source. I don't know what is the information he is holding. But as we speak, that Yes Bank is falling. Because I don't know how the market would be reacting as far as Yes Bank is concerned. Neither my video, you would be buying Yes Bank, you would be selling Yes Bank. If you wish to buy, that is your call. If you wish to sell, that is your call. I am not telling you. But my concern is that if SBI would be cutting his stake in Yes Bank, example, like today SBI holding 26.14% stake in the Yes Bank. Does that mean that SBI, the relevant, assuming they cut 5% out of it, so they say we would be cutting in four phases of 5% each, assuming. It means in the five phases, 5, 5, 5, 5, 5, they would be completely quit the Yes Bank. Assuming example. Does that mean that the private equity and the venture capitalist firm will participate in Yes Bank? In the last 2 to 3 months, we have seen an active participants of private equity and venture capitalist in Yes Bank. And more importantly, as far as the private banks are concerned, example, HDFC Bank, example, ICICI Bank, example, Axis Bank, example, I would say your Kotak Mahindra Bank. Yes Bank is amongst the cheapest stock. ICICI Bank, if I'm not wrong, it's around 850. Axis Bank is also around 850. Kotak Mahindra Bank is 1740. HDFC Bank is, I think, 1600. Henceforth, in the top private players, Yes Bank is the cheapest, hardly 18 rupees as we speak. But having said that, this is my apprehension. I'm not sure about that because I am a person who believes in data. And unfortunately, I do not have data in my hand, but the common sense and the guess, the hunch which I'm making, if SBI is quitting, the private equity and venture capitalist may participate in Yes Bank. Now, please be note that I am not at all bullish on the banking sector across the globe. Not at all bullish as far as the banking sector is concerned. Number one, the interest rate are rising across the globe. Whether it is United States, whether it is European Union, whether this is, the Korea, whether this is India, whether this is Singapore, whether this is any country of the globe, the interest rates are rising. And rising interest rate, common sense, is putting a severe stress on the balance sheet of the normal public of that country. So, example, there was a time where the Federal Reserve rate were around 0.25% in United States. In India, the RBI rate were around 3.2%. Today, Federal Reserve is around 5%, RBI is around 6.25%. The more the interest rate would rise, the stress would build up, and guys, it is happening. We notice that hardly any company left in the globe who is not cutting the job. Whether this is, you would say it is Goldman Sachs, JP Morgan, Facebook, Microsoft, Amazon, Google, General Motor, Ericsson, Intel, the list is very, very long. And why are they cutting jobs? They are cutting jobs because the logic is very clear. Due to the hike in the interest rate, the demand is falling. And since the demand is falling, they are cutting the workforce of their company. More importantly, if the interest rates would continue to rise, I guess in this eventuality worldwide, the non-performing assets would escalate. Common sense, people who took the money will not pay this money. They will say, you put the case on us, you take us to the court, let us be bankrupt, but we will not pay your money because the interest rate has rose to an unprecedented level. I am not at all bullish as far as the banking sector is concerned. To me, whether SBI will cut the stake or SBI will not cut the stake in Yes Bank, that is a matter of time. But yes, having said that, if SBI would continue to be on the board of the Yes Bank, then at least you have a level of trust. Trust in the sense like the government is sitting on the board of Yes Bank. That's more important because SBI is what? SBI is all about the government, right? It's a government bank owned by the government. But if SBI would quit the board of Yes Bank, assuming the private equity and the venture capitalist will enter in Yes Bank, in this eventuality, my trust on the Yes Bank would shake. Because even today, when SBI is on the board, Yes Bank is giving the financial services to OctaFX. OctaFX is nothing but a trading platform who is being named in money laundering. So even if when SBI is on the board and holding 24% stake in Yes Bank, they are providing services to OctaFX. What would happen if SBI will go away and private equity and venture capitalist firms would manage the show in the books of Yes Bank? Rest time would be telling, but this is definitely a surprising news for me also. But having said that, I am watching this news very carefully. I'm also watching that, in what probabilities, in what circumstances, Yes Bank would be representing himself before the Supreme Court of India. And let me see how the Honorable Court would be taking up this matter. It would definitely be a very interesting exercise, not only as a hedge fund manager, but also as a law student, because the finance will come into the picture, the law will come into the picture. It would be a very interesting exercise, and I'm really waiting for that. Let's see how the things would move out. This is Rahul Magan from Treasury Consulting Group. You have my number +91 98 99 242 978 +91 98 99 242 978. In case you wish to have more information, please visit our fixed income platform www.fixedincome.global www.fixedincome.global. Have a great time ahead.